In a recent development within the cryptocurrency landscape, issuers of spot Bitcoin exchange-traded funds, ETFs, have submitted comprehensive applications containing revised fee structures to the U.S. Securities and Exchange Commission, SEC. The regulatory body, in turn, has responded promptly with insightful comments, thereby triggering speculation and uncertainty within the crypto community regarding the anticipated approvals of Bitcoin. The heightened discourse was catalyzed by a social media post from Chamber of Digital Commerce CEO Perry-Ann Boring, where she underscored the SEC's issuance of additional comments on pending applicant S1s, framing it as a potential signal of delay. The post garnered substantial attention, amassing over 1 million views and contributing to a palpable sense of unease among cryptocurrency investors. However, as market participants grappled with this information, conflicting perspectives emerged. Bloomberg Intelligence ETF analyst James Seifert offered a counter-narrative, expressing reservations about interpreting the SEC's comments as a clear delay signal. Seifert argued that the swift response from the SEC merely underscored the regulatory body's efficiency in processing these complex applications, rather than indicating a deliberate slowdown in the approval process.
Seifert's nuanced perspective centered on the unprecedented speed at which the SEC provided comments. He emphasized that receiving feedback on the same day as submitting documents is a rarity, suggesting that if the SEC were intent on delaying the process, issuers would not have received comments so promptly. Adding depth to the analysis, finance lawyer Scott Johnson elucidated a pivotal aspect of the situation, highlighting the nature of the submitted revisions as S1 forms. Importantly, Johnson clarified that the SEC does not necessarily need to approve S1 forms before granting approval for the spot Bitcoin ETF application forms, 19B4. Drawing parallels to the approval process of futures ETFs in 2022, he cited the example of Hashdex, which received comments after its 19B4 was already approved. Johnson concluded that the expeditious comments from the SEC signify a proactive approach aimed at facilitating a swift approval and launch, in contrast to the more protracted process witnessed with futures ETFs. In an effort to allay concerns, Fox Business journalist Eleanor Tourette sought insights from industry sources, confirming that there is currently no indication from the SEC of a change in schedule. Tourette relayed feedback from individuals who received additional comments, asserting that they remain unconcerned and that the SEC has not communicated any deviation from the original plans. This information has contributed to a growing sense of reassurance within the industry, with professionals expressing confidence that the comments are part of the standard procedural discourse leading up to the January 10 deadline. Turning attention to the unveiled S1 forms, these documents have provided a comprehensive look at the varying fee structures proposed by different Bitcoin ETF issuers. Bitwise has set a competitive tone with a fee of 0.24%, positioning itself favorably within the market. Meanwhile, VanEck and ARK Invest have marginally exceeded this, opting for a fee of 0.25%. Notably, Invesco has adopted a distinctive strategy by offering a fee waiver for the first 6 months, effectively reducing its fee from 0.59% to 0 during this period. On the other end of the spectrum, Grayscale stands out with the highest fee, pegged at 1.5%. Despite this seemingly high fee, Grayscale's Bitcoin Trust, GBTC, has demonstrated significant trading volume, surpassing the majority of ETFs on January 8 with close to $500 million in transactions. In conclusion, the recent developments surrounding Bitcoin ETF applications and the subsequent SEC comments have injected a notable degree of uncertainty into the crypto market. While initial concerns about potential delays were fueled by social media posts, a more nuanced analysis suggests that the SEC's comments may be indicative of a concerted effort to expedite the approval process. As market participants navigate this landscape, the varying fee structures unveiled in the S1 forms underscore the competitive dynamics at play among Bitcoin ETF issuers, further adding complexity to the evolving narrative within the cryptocurrency space.